Assalamu alaikum and very good evening, ladies and gentlemen. I'm Tarek Rifatullah Khan, Managing Director and CEO, current charge of BRAC Bank PLC. It is my pleasure to welcome you to our 2024 full year earning disclosure event, where we will also share key highlights from the first quarter of 2025. This is a live webcast event. The link is shared to stakeholders through press advertisement, website post, and Facebook post. We are also live with the presentation on our Facebook page. Next slide, please. This is a general disclaimer. Could you go to the next slide, please? So we'll quickly look over our market update, highlights from each business segments, distribution network, risk management, and later present financial updates from our bank as well as our subsidiaries, Bcash. First, we'll hear from our Deputy Managing Director and Head of Treasury, Shaheen Iqbal, on market update. Over to you, Shaheen Bhai.
Thank you, Tarek Bhai. Good evening, everyone. I will start with recent developments. We are seeing some good improvements on Bangladesh economic recovery. For this one, central bank recently has adopted market-based exchange rate. The country was having challenges in terms of exchange rate management. So I think we are seeing good improvements on that line. And also on the inflation side, as Central Bank Governor has mentioned, we expect to see gradual improvement on inflation. Means inflation is going to come down. The expectation is below 7% by August 2025 and further downward by December 2025. So there are broad-based improvement on the exchange rate and inflation. On the external balance side, we expect to see inflow of 3.5 billion of inflow from various multilaterals in the form of budgetary support and financing support. So that again is going to give us good boost in terms of FX reserve. And also we are seeing some good improvement in terms of election. Election is likely to be held between December and June 2026. So there will be more certainty after declaration of election date. And overall balance in terms of foreign currency balance, you can see from the graph, export has improved, import growth has improved, but overall trade balance has come down. Remittance is showing very good signs, growing more than 26% per annum. Current account balance for which has improved. Overall balance has improved significantly and reserve is stabilizing. So overall, there is good improvement in terms of external balance and economic recovery in my view. Next slide, please. You can see from the multilaterals like IMF, World Bank, IDB forecast, even though this year growth up to June this year is muted, but next year's projection is pretty robust. We are going to bounce back from July onward. So we expect to see good economic recovery from July onwards. And also, as I mentioned in my previous slides presentation, with the policy rate increase and also the decrease in the inflation, we expect to see gradual improvement on inflation in terms of inflation is coming down, and which gradually would give us a good position to improve in cutting down the policy rate so that the lending rate might come down at the end of this year. So we are seeing good signs of recovery for the economy and good improvement of output by the end of this year. There's a small brief from my side. Up to you, Tarek Bhai again. Thank you very much.
Thank you, Shaheen Bhai, for your quick update. We take key notes that economy is recovering and gaining momentum in all key parameters, including trade deficit, remittances, reserve, as well as moderate level of GDP growth forecast. Now, let's hear from our additional manager and head of SME on his presentation of SME business highlights for 2024 and quarter 1 2025. Kamal, what to you?
Thank you, Tarek Bhai. Assalamu alaikum and very good day to all of you. It's a true honor for me to speak on behalf of our SME banking family at BRAC Bank as we share our performance highlights for 2024 and the first quarter performance of 2025. As the pioneer and the market leader in SME banking in Bangladesh, 2024 was the year that tested us and inspired us. Our team stood strong against all odds in a very, very volatile economic environment. We continued to move forward with resilience, innovation, and genuine commitment to the small businesses that form the backbone of the economy. Let me share some key highlights that we have achieved together in 2024 as well as in Q1 2025. Our SME customer base grew by 23%, and as of March, the customer base stands more than 700,000, a 24% year-on-year increase. The highlight of last year's performance as well as this year's performance is the SME deposits. We experienced a whooping 53% year-on-year SME deposit growth in the year 2024. So the SME deposit book has now gone up to 14,289 crore. And we also experienced an additional of 8% growth in Q1 also. And in 2024, during a very difficult situation also, our SME assets grew by 16%, which now stands at 30,535 crore. But during Q1, the growth is a bit muted due to the lower demand by our MFI customers. However, our small business still grew by 16% year-on-year in Q1 also. The trade business experienced a remarkable 29% growth in 2024. And in Q1, the trade business has doubled, experienced a 98% growth. Our portfolio quality, as we all know, we have a very close hawk eye on our portfolio quality in all situations. And we maintain that portfolio quality. And we have experienced a 41 basis points reduced NPL in 2024. However, due to the market conditions, there is a slight rise in our Q1 NPAs due to the external stresses, but our fundamentals remain very, very solid. We also took significant steps in digital and inclusive banking. Digital account onboarding for SME customers has gone live, making banking simpler for SME customers. Facilities like bKash repayment, 24/7 cash management, and eLab helped our customers better. Collaboration with multilaterals like Swiss Contact, Water.org helped us support the underserved communities, especially women-led businesses. These achievements aren't just mere numbers. They represent people, enterprise who are growing, families who are thriving, and communities that are progressing. This is what purposeful banking means. As we look ahead, our vision remains very, very clear. We will keep leading SME financing, pushing digital innovations, driving inclusive growth, and we will invest more in technology, deepen strategic partnership, and also continue to advocate policies that empower Bangladesh's entrepreneurs. I would like to thank our board, our senior management, our regulators, and above all, our SME customers who trust us every day. Thank you very much. Over to you, Tariq Bhai.
Thank you, Tamal. Our SME business has showcased outstanding results in 2024 and continued that trend in Q1 2021 as well. So I will walk you through the next segment, corporate and institutional banking. In 2024, we have achieved tremendous growth in loans and advances due to developing of an enabled platform over the years, which is giving results. We have expanded our footprint in new segment as well, strengthened our footprint that we have entered into last couple of years. In transaction banking, we have enhanced synergy among the intra-departments and inter-divisions. This has yielded positive impact on our transactional deposit with healthy CASA and TD ratio. This synergy will also help in reducing cost of deposit in the coming periods. We want to be the leading trade bank, and working on this aspiration, we have undertaken digital platform solutions for the coming period. We have expanded trade solution in public segment as well with overall efforts. We have also achieved $5 billion trade volume in 2024. And with current momentum, we aspire to reach $7 billion trade volume in 2025 ending. Our prudent risk management culture helped us managing satisfactorily portfolio quality in 2025. Few spikes in NPL may occur due to ongoing economic issues. However, we have taken necessary measures to overcome such challenges. That's all from corporate and institutional banking. So I'll invite our deputy manager and head of retail banking, Mahir Islam, to go through the highlights of retail banking perspective. Mahir, over to you.
Thank you. Good evening, everyone. In retail banking, we had excellent growth in customer deposit and assets during full year 2024. I will highlight the key areas. Our customer deposits grew strongly by 35% year-on-year, with net increase of BDT 8,000 plus crore. Due to ongoing rise in interest rates, our customers were more inclined towards fixed deposits, which reduced our CASA mix to 35%. In terms of customer sub-segments, which is a key strategy of our retail banking going forward, our premium banking, which is targeted for high net worth customers, crossed the milestone of BDT 10,000 crore deposit book, and our TARA, which is targeted for women customers, also crossed a milestone of BDT 9,000 crores last year. We continued our focus on digitalization. 76% of our eligible accounts were opened digitally, and our mobile app, Astha, users crossed 800,000 plus ways. We also disbursed 19,500 digital loans in 2024, with a total book of now 23,000 loans disbursed through our Shubida app. We continue to be selective on lending in specific customer sub-segments, such as employee banking, government sectors, and so our customer assets portfolio grew by 15% year-on-year, with net increase of BDT 1,200 plus crore. The asset yield also improved to 9.4%. Another important business side, or the portfolio, in terms of portfolio monitoring and collection, our NPL decreased to 21 basis points, and compared to the industry, our retail assets portfolio remained in better position. Merchant acquiring, which is another key vertical of our retail banking, also had a very strong growth of 70% year-on-year, and which reached BDT 12,000 plus crore volume in 2024. Next slide, please. Now I'm moving on to Q1 '25 updates, where we have continued to grow sustainably on both retail deposits and assets. Our retail deposits year-on-year compared to last year first quarter grew strongly by 39%, with our CASA mix remaining unchanged at 35%. However, our cost of deposits increased to 6.36% due to our customers' demand for high-cost fixed deposits. We have already taken measures on savings product to improve our cost of deposit. Customer assets portfolio saw strong growth of 22% year-on-year, especially this quarter, and we crossed the milestone of BDT 10,000 plus crore in retail consumer assets, which is the largest in Bangladesh. In terms of portfolio monitoring, we faced the challenges, particularly on the NPL side, due to macroeconomic stress in PAR increased by 21 basis points, and our NPL increased to 4.02%, which was mainly due to changes in Bangladesh Bank guidelines on loan classification. Overall, we are now well positioned to take our retail banking business to newer heights. That's all from my side. Thank you.
Thank you, Mahir, for your quick update. We have taken a comprehensive, strong strategy for driving retail asset and deposit growth in our particular segment, and which is clearly seen in our Q1 results as well. Thank you, Mahir, again. Now, I will invite our Deputy Manager and Head of Treasury, Shaheen Iqbal, again to go through the highlights of Treasury and FI segment. Shaheen, over to you.
Thank you, Tariq Bhai. I think one of the biggest success that Treasury had is to take the opportunity that market is offering. Like we continue to get benefit out of our position through investing in government securities and effectively managing our duration of government securities portfolio. Again, another key area of success is like ensuring proper flow of FX and liquidity. Our remittance has grew by 96% in 2024. We have moved to ranked 4th position from a lower position, like 6th. So this has really enabled all the franchise to really get benefit out of this FX flow. So overall, like we have been very strong in terms of both liquidity in local currency and foreign currency. We are able to capitalize on the overall liquidity in both local currency and foreign currency as well. Also, like we ensured we manage our risks very effectively. We kept ourselves very liquid. We managed our risk position very efficiently, and we have been able to take benefit out of the situation very efficiently as well. So overall, 2024 and Q1 2025 was very successful period for BRAC Bank Treasury and the BRAC Bank as well. Let us move to the next slide. And also, we continue to be the number one bank in terms of international rating and local rating as well. We are the only bank equivalent to sovereign by both Moody's and S&P. I think that's it from my side for the time being. Thank you very much again. Over
Thank
to you,
you.
Tarek.
Thank you. Now let me ask our Deputy Manager and Head of Branch Distribution Network, Sheikh Mohammad Ashfaq, to go through the highlights. Ashfaq, over to you.
Thank you, Tariq Bhai. BRAC Bank's branch network continues to deliver strong, consistent performance. We achieved a record deposit net growth of BDT 13,000 crore in FY 2024, with an impressive BDT 5,000 crore in Q1 2025 alone, signaling sustained customer trust. Asset disbursement and remittance figure reflect robust engagement, with credit card issuance reaching 22,000 in FY 2024 and 2,500 cards in Q1 2025. Our strategic moves, including relocation of 13 branches, BI tools for manager, and opening of 40 new outlets, are enhancing customer access and experience. Importantly, compliance remains a cornerstone, with 0% branches needing improvement in ICC audits and 44% rated strong in AML. The momentum is very strong, yet we have room to grow in the spaces like increasing CASA mix, digitalization of more services, and freeing up our staff for more high-value customer interactions and constant focus on improving CX. Thank you very much, Tariq Bhai.
Thank you, Ashfaq. Our branch network is bringing the highest deposit growth over the years, driving deposit growth of the organization and fulfilling our requirements actually. Our aspiration will be growing more transactional deposit from this channel over the coming years. Now, I'll go to Deputy Manager and Chief Risk Officer Ahmed Rashid Joy to go through the highlights of our risk aspect. Joy, over to you.
Thank you, Tariq. Good evening, everyone. Ladies and gentlemen, in our first slide, that's on the asset quality, and you can see that we ended the financial year 2024 with NPL of 2.63%, lowest in our bank's history. Even in absolute number, if you look at the blue bar, the NPL amount was lower by Taka 113 crore than that of the year 2023. Here, I'd like to briefly explain to you why our bank's NPL number is lower compared with the industry. First is the diversified portfolio. Our loan book is well balanced, 42% exposure in corporate, 42% in SME, and 16% retail. Second is the granularity. Around 60% of our book is in SME and in the retail segment. Average ticket size for retail loan is $6,500, and for small business, it is $14,000. Sanctions to diverse group of professionals and in the various economic subsectors. Moreover, our risk acceptance criteria in corporate banking have been formulated after thorough understanding of the corporate banking market risk. So these are the fundamentals that why our asset quality is better, which I thought to share with you. However, in Q1 2025, you will notice that our NPL increased to 3.13%, and that is because the change in the definition of past due on term loans by Bangladesh Bank, which came into effect in this period. Next slide, Dev. So on the top left corner, we are presenting our weak loan ratio comprising of NPL, COVID restructuring, and rescheduling. In 2021, that is just after the COVID, the ratio was 8.20%, and it declined to 3.13% in 2024. You will notice that the gray colored portion of the bar representing pandemic-related restructuring disappeared in 2024. However, the stress portfolio increased to 3.64% in Q1 because of the increased NPL, as I mentioned earlier. On the bottom left corner, we are presenting the vintage of our loan in the last 7 years. The gray portion of the bar represents the total amount disbursed during that year, and the red portion represents current NPL amount originated in that particular year. Let's take the example of 2022, where we disbursed 40,617 crore, of which presently NPL amount is 421 crore, which is 0.71% of the total disbursement in that year. So in the last 7 years, we disbursed total loans for taka 2.49 trillion, from which only taka 17.66 billion is now NPL, and that is also 0.70% of the total disbursement. So this is all about vintage, which clarifies year-wise loan origination in a better way. Our NPL coverage ratio on the top right, ratio in the financial year 2024 was 134%. We have kept a buffer in the year end considering the regulatory changes on the definition of NPL that were forthcoming. And you may notice that the coverage dropped to 116% in Q1 because of the rise in NPL. Ladies and gentlemen, for the first time, we have rolled out all sorts of statistical scorecards like application, behavioral, and collection scorecards in our retail lending. Soon, we will roll out behavioral scorecards in our small business lending, and only then we will price risk accordingly. And that's all for me. Tarek, over to you.
Thank you, Javed. We have grown our business in many folds in the last couple of years. At the same time, prudently manage our portfolio quality. A big appreciation goes to our relationship team, sales team, our underwriting team, recovery, and overall risk management process and procedures. Thanks goes to all. Now, let me introduce our Deputy Managing Director and Chief Financial Officer, Mr. Masood Rana, to go through the financial performance highlights. Masood bhai, over to you.
Thank you, Tarek. Assalamu alaikum and good evening to all. 2024 has been a remarkable year for BRAC Bank, and it continues in the Q1 2025. If you can notice, the strong results have been delivered by the bank. It's a strong set of results. Predominantly, the driver of this business has always been our customer. In the year 2024, our customer base grew by about 14%. The breakdown is here. Roughly about every day, we have included 2,000 new customers. In Q1, it has actually grown by about 50%. Our balance sheet momentum continues in 2024, which also spilled in 2025. Deposit, if we look at our franchise, our bank has delivered about 4.6 times growth compared to the market. It was 34%, whereas market was growing about by 7%. In terms of loan, we have grown about 2.8 times of the market, 20 versus 7% again. And as a result, we have in both the spaces, both in deposit and loan, we have gained market share. Fundamentally, our performance has been categorized by improving in our NIM. If we look at in the last 15 months, we have grown our net interest margin, both from our lending and investment book. So that has helped to achieve our operational efficiency in terms of the way we have reported our cost to income ratio. That has dropped down to 47%, with a clear positive jaw of 22%, which means the percentage our investment, the cost has grown, the revenue is growing faster, with a clear difference of 22%. I'd like to also mention this. The bank has been continually investing in people, which is our major capital, infrastructure, technology, and other aspects. If we look at our trade finance business, our trade throughput has completed in 2024 was 5.6 billion. In the first quarter, we have achieved 1.8 billion. Overall, our interest income and NFI base has grown to 11. You'll be happy to know as we speak, our balance sheet has exceeded 1 trillion taka. So as a result, the base of this revenue is now quite significant. Another aspect of our business has been focusing on the foreign exchange. We are kind of re-energizing and focusing on this remittance business. We have secured fourth position in terms of the remittance gainer, which was sixth position in 2023. I think our CRO has mentioned we have been continually improving our asset quality. In 2024, it was 2.6%. But however, in Q1, it has slightly increased because of the transitioning into the new regulation. And I would like to convey our heartfelt thanks to our underwriting team, collection team, who has been continuing a fantastic job in the collection space. When it comes to capital, there's no doubt BRAC Bank continues to hold a very strong capital position. In the total capital position, about 85% is the core capital, tier 1 capital. If we move forward, I was mentioning the market share. We have delivered a very strong result, and as you can see, our strategy of gaining market share is making inroads. In the end of 2024, the market position in terms of deposit was 3.88%, whereas lending was 3.72%. But as a franchise, we have been very strongly growing in the deposit side, which can be seen in the Bangladesh Bank data. Now we are capturing about 4.5% of the deposit market. Moving on, we call it the Wheel of Astha. Astha is our retail app, and we'd like to give you a quick glimpse of the element: customer deposit loans, our lending yield, our cost of deposit, total revenue, total expenses, and regulatory capital. So net, I've already covered these. My colleagues have covered these. The interesting part is that bank delivered about 66% year-on-year growth on the profit after tax. And therefore, we have proposed a 25% dividend for our shareholders, and we'll be holding our AGM on 19th of June, where the shareholders will decide on this. Moving on, Q1 also shows a good number in terms of the profit after tax. It's a year-on-year 34%. And if you look at customer deposit loans, most of them showing a green light with a very strong number. Moving on, customer deposit as a franchise, as a bank organization, we have grown year-on-year 36%. And as you can see, all our customer segments actually growing very strongly. SME grew about 53%, retail 35%, and corporate was no less 27%. In Q1, on year-on-year basis, that continues 36%, SME 46, 39, and corporate and institutional 24%. Moving on, this has been one of our core strengths, the diversification. As you can see, our deposit is also quite diverse and distributed among the client segments. And noticeably, SME is picking up and growing very, very fast. Looking at Q1, this has also grown to 22%, 30% from the corporate side, and retail continues to supporting us with a very strong funding. Moving on, I think this is our CASA and TD mix, which remains more than 40%. Last year was 42% in Q1. It has slightly gone down to 41%. I think when we look at the loans and advance, Bank grew about 22% in 2024, SME 12%, retail 16%, and led by corporate and institutional, which was 31%, staggering. And in Q1, it's been a bit muted, as you can heard from my business colleagues. This is a kind of a function and reflection of the market, but BRAC Bank is continuing to focusing on the right kind of strategy, and we believe in the coming quarters we can see this growing even faster. Moving ahead, I think this is Q1. I have covered it. Go to the scorecard. Yes, this is the 24, our diversified balance sheet, corporate and institute 42%, SME 42%, and retail 16%. Kind of just opposite of the deposit. Q1 remains more or less similar composition. So I think we have highlighted most of it. I would just like to highlight that earning per share in last year for last full year was 6.86%, a significant growth. Our ROA return on asset is 1.46%. I believe there is a room for us to even command higher position. ROE is 17.4%, and NAV has improved by around 6 taka per share, and with a very strong capital position. In Q1, the profitability and all other metrics is improving, as you can see. I think we can move with this. We can have a go to the subsidiaries, full year subsidiaries share. Yeah. Thank you. This is our overall group performance, bank plus our all 4 subsidiaries, 2 capital market subsidiaries, and a exchange house, and of course, bKash. However, because of the market condition environment, our capital market subsidiary is in the negative space. While as soon as the market, get into a right track, we believe these 2 entity has a potential to come back immediately and fire their all engines. BRAC Sarjan is coming back in the business and regaining its footing in the market. We are hoping to see better results in 2026. I think 2025 Q1 reflects more or less similar, and bKash has been producing a very, very good number, while as I can see, the 3 other subsidiaries also put up a better results. And as a result, our Q1 number is also showing a good growth year on year. I think if Moin Bhai has joined us, I'd like to invite him to let us, if we can hear from him about bKash regarding full year and first quarter.
Yeah. Thank you, Masud Bhai. And very good evening to all the viewers. So as always, I'll take you through the 6 basic health parameters of bKash. So the first one is our biggest asset, which is customers. We added 300,000 customers in the first 3 months of the year, which averages around 23,000 customers a day. So our customer base increased by 0.4%. However, our active customer base increased by 3%, which goes to say that more and more customers are using bKash for other use cases. We added 1.2% to the market share in this market conditions. In terms of merchant base, remain more or less stable. About 7,000 more merchants were added into the ecosystem. Our transaction volumes, 1.1 billion takas in a month, which translates to about 38 billion taka is being transacted every day on an average. In terms of agent point, we finished off March with 362 or 363,000 agents spread across the country, which is about a 4.5% increase over end of December last. Dave, next slide, please. Yeah. Moving on to the P&L. And this is the full year P&L. So we in 2024 we clocked a revenue of 5,729 crore taka, which is a 20% increase over prior year. The revenues have basically come in from volumes, which increased by 20%. And why have volumes increased? Because of increased customer base and increased average transaction value per customer has also increased. Those are the two big drivers of volumes. And if you look at it on a product-wise basis, it's essentially cash out and P2P that has driven these revenues. So 5,729 crore taka was the top line revenue. If you take off VAT, we come to net revenue, which is 5,058, which is again about a 21% increase over prior year. The cost of services was 3,270 crore, which is a 12% increase. Now, if you notice that our net revenue increased by 21%, however, our cost of services increased by 12%. That's because of two reasons. One is customers are transacting more of the value-added products like payments, bill pay, etc. And the other reason is that we rationalize some of our commission that we pay in the supply chain, which i.e. agents and distributors. So our gross profit has increased from 30% to 35% in 2024. So that leads to a gross profit of 1,788 crores, which is a 42% increase over same period last year. In terms of expenses, increased by 20%, more or less in line with the top line gross revenue. Operating expenses, the primary drivers of expenses are technology costs and human resources cost. Commercial expenses represents a 12% increase, and that's really the increase in our marketing expenses and our distribution expenses. That leads to an operating profit of 342 crores, which was only 31 crores same time last year. Profit and net finance income is the income that we derive from our own working capital, which also increased by 17%. Profit before contribution to Workers' Profit Participation Fund was 531 crores. And you take off WPPF, profit before tax was 505 crore taka, which is a 176% increase over same time last year. After income tax, the bottom line comes to a profit of 316 crores, which is a 220% increase over same time last year. So yes, this will be the third year that bKash is making profits, and we made the ever highest profits of 316 crores. A quick snapshot of how we are doing in the first 3 months of the year. Our performance for the first 3 months compared to the last 3 months of 2024. So we've grown by 35%. Our volumes have also grown by that much. And the primary driver of this revenues is volumes. Our cash out revenue is really driving this, and our P2P revenues are driving this gross revenue. So 1,859 crores is what our top line revenue was. After VAT, it's 1,637 crores. Cost of services is the increase of cost of services is the same as the revenue growth. We have not touched, or we have not done anything to review or to optimize the channel cost, because we did make a change in 2024. We did not make any changes so far in 2025. Operating and administrative expenses, basically the primary driver again is technology and people cost. Commercial expenses is 125. Please, this was the Eid was in the first in month of March. Although all Eid expenses is a part of this part of the expenses, and so is the revenue also a part of. So on the two festive months, our revenues go up. For the first Eid, the expenses are included here, and so are the revenues. That comes to an operating profit of 139 crores, which is an 83% increase over prior year. Net finance income increased by 31%, and profit before tax is 189 crores, which is a 63% increase over prior year. And after tax, it's 132 crores, which Masood Bhai mentioned in his slide. So yeah, at the end of the first quarter, bKash bottom line was 132 crores, which has been the ever highest so far. That's it from my end.
Thank you, Moin Bhai, for your excellent quick update on bKash financials. We are at the end of the entire disclosure event, and now I would like to request Dev to initiate the question and answer session. I hope we have received questions from our valued stakeholders by the time. Dev?
Yes, Tarek Bhai. So I would like to first ask Moin Bhai a few questions about the bKash. So Moin Bhai, the first question is that what's the percentage contribution from cash out and merchant business in bKash revenue?
So cash out is about 76%, and merchant is about 7%.
Thank you, Moin Bhai. Same question is that the float money of bKash rose significantly just in a quarter. So what are the catalysts?
One is the volumes have increased, and one is the effective interest rates have increased because primarily the yields on government securities have increased, and that's been the driver of the float income increase.
Oh, thank you. Then third question is that what will be the competitive landscape if foreign player like Google Pay comes in play?
So as I showed in my first slide, bKash has a market share of about 66% at the end of 66.5% at the end of March. We continue to hold this, and bKash continues to be the dominant player there. And as the market expands, it's quite natural for operators to be attracted to this market. And bKash is confident of holding on to this share because of the sheer presence on the ground.
Thank you, Moin Bhai. The last question on bKash is that we have seen that bKash has added a feature on automated cash management. So what would be the impact of this particular feature on your financial performance?
So the automated cash management really benefits the agents who can transfer or deposit money to increase either their e-money inventory, or if they need cash, they can withdraw cash. So this is almost like a 24/7 exercise. They do not depend on, in normal circumstances, they would have to depend on the distributors' staff coming and servicing the agents. But now it's almost like a self-service. They can go to an ATM and withdraw cash, or if they need e-money, they can go to and transfer money to bKash account and automatically get e-money. So it's a round the clock service for agents with small quantum of working capital. They can repeatedly convert their cash into e-money and vice versa. So their return on capital employed increases dramatically with 24/7.
Thank you, Moin Bhai. That's all that we question received for the bKash. Now I will come back to Tarek Bhai. Tarek Bhai, we have received few questions on BRAC Bank performance. So
Okay.
I would like to ask few questions on that. The first question is that how BRAC Bank foresees the loan growth and market landscape going forward?
Okay. If you look back our past track record for last couple of years, you'll see a huge growth we have achieved over the years. Because it's not achieved in a day. We have been working to create the enable platform for last couple of years, and which is actually giving us the result. And our midterm strategy was to to focus on doubling our portfolio within a defined time frame, and that milestone we have already achieved. And our longer term of vision and objective remains unwavering. That is to become the largest and most impactful bank in the industry. So we'll not stop over there. And our aspiration is much larger than that what we have actually achieved so far. Thank you, Dev.
Thank you, Tarek bhai. The next question is on about our asset quality. So I would ask the question to Joy bhai directly.
Yes, here would be
To
the
Joy
right
bhai,
person.
with the new loan classification and provisioning requirements, which is in effect from 1st April 2025, how will the new regulation affect BRAC Bank's NPL and provisioning expense? And given SME lending, which is one of our core strength, and we used to enjoy lower provision over there, so is a huge part of BRAC Bank's lending portfolio will be impacted for that?
Yes, so the first part is on what will be the impact of NPL. We have done this exercise stress testing, I mean, from the end of last year, a couple of times, just to see what will be our impact given the new regulation. And we found on average like 30 to 40 bips will increase in our NPL ratio. So it's an increase of 0.3% to 0.4%. This is one. But the greater impact what we see is on the provision side. In what sense is that the new circular also suggests that the general provision will be increased for SME lending from 0.25 to 1%, and the others will have benefit like retail and the corporate. Now, since our SME book is very big, so we will have higher requirement for the general provisions. So that will come into effect from April 1, and that we are planning to, book it on monthly basis till 30th June, I mean, in the mid of the year. So that will be done. So bottom line is that the general provision will increase for SME. But on the NPL impact, it's like 30 to 40 bps only. Thank you.
Thank you, Joy. Thank you. Coming back to Tarek bhai. So you have already explained, but again, I am repeating the question. The question is that BRAC Bank's medium-term strategy comes to an end, and what will be its plan for the days ahead?
I would like to reiterate again that our objective is to become the largest and most impactful bank in the industry. So it's a broad objective that we are actually pursuing to achieve. So this is our objective. Until and unless we have achieved this new objective or reframed objective, our persuasion or our effort will be there.
Thank you, Tarek bhai. So coming to next question, could you please share the key factors that influence interest income in 2024?
I would like to refer this question to our CFO, Masood bhai.
Over to you, Masood bhai.
Thank you, Deb. Yes, as we were discussing, our balance sheet has grown significantly in the last year. Our balance sheet grown about 28%. As you can see, our lending book grew about 20%. The investment book grew about 30%. So altogether, that the volume has also played a key role. But as I was mentioning, our NIM has also improved. If you can recall, last year when we closed 2023, our NIM was close to 4%, 3.94 or 96%. When we exit 2024, the NIM was 4.1%. The clear 15 to 20 basis point, year-on-year movement. But if you look at the second half of 2024, the NIM was improving because the SMART was abolished and we could, price our asset as per the supply and demand. And since we are playing in the three different business segments, particularly in the SME and corporate, this was quite fast in pricing our asset, while retail is, comparatively, long-range product and lending book. And therefore, with this diversification, overall, in last 6 to 8 months, we could see a great improvement in our NIM, which has helped in growing our interest income.
Thank you, Masood bhai. The next question is also related to the interest earning assets. So I would ask the question directly to you. The question is that what are the expected key drivers or factors that will impact the interest earning asset and funding cost in 2025?
I think Shaheen Bhai mentioned that we actually in a good spot in a sense. We actually foresee this opportunity and took a early position in terms of our investment book. We have repositioned in terms of maturity of our investment book. So we have got around, as we speak, 25 to 30,000 crore book, which is kind of in different buckets. On an average, it's over 2 years maturity. So and the yield when we locked it was pretty decent, which is close to 12%. On the other hand, as we have a short tenured book, in our overall local currency yield is now reaching about 12%. So net, I can see this, growth in the net interest income will continue going forward. However, we have been driving our deposits very, very strongly and at I would say, at a very competitive price. But the next, when we grow, the strategy is to focus on the CASA, particularly on the transactional flow, and which we can see a great improvement in the last 2-3 quarters, both from SME and also corporate as usual. And also a renewed focus from the retail side to go after the particularly savings space. So yes, our cost of deposit may have been a bit on high compared to our peers or in terms of overall market. But I think overall, with this strategy, the cost of deposit and cost of funding will go down. And as a result, higher yield and lower cost of fund would give us even stronger net interest margin going forward.
Thank you, Masood Bhai. Back to Tarek Bhai. The question is that, has there been any changes in the bank's liquidity profile or funding mix? And is the bank focusing more on corporates right now?
Absolutely not. Actually, what we have projected and how our asset mix is, you have seen that our asset mix is blended with 50% SME, 40 or 35 to 40% is corporate, and 10% is around retail. So since our book is growing, our pie will be much bigger, but the ratio will be more or less the same. So strategy will be actually the same, the way we have been leading this bank for last couple of years, and the way we have already been successful in some areas. So we don't want to change the strategy until unless any disruption comes actually. So in sometimes market disruptions, sometimes we have to tweak our strategy a bit, but we don't shift away from our objective at all. Thank you.
Thank you, Tarek Bhai. We are just about to in our last question. So the question is that, how does BRAC Bank plan to balance continuity with and potential shifts in the strategic priorities with the resignation of MD and CEO Selim Alek Hossain? And what would be the future strategies or directions in this context?
Yeah, actually, partly I have already answered the question, because our objective will remain same. Our strategy will be on the basis of the market condition, but nothing will change. Mr. Selim Alek Hossain has already submitted his resignation on personal ground, and our board had accepted his resignation. I think nothing will change actually. It is the objective and the strategy that we have already laid. We have laid the foundation to grow our assets and deposits in manifold, and that will be continued. Masood Bhai would like to join in this conversation.
Yeah, I think. Thank you, Tarek. You rightly said, nothing changes. In fact, Selim Bhai, we thank Selim Bhai to steer us to here. He has made the foundation. We'll go on this foundation and excel even higher. So, to my mind, there is nothing has changed. In fact, we will be, working on his path and build this franchise and bank to even newer heights.
Thank you, Masood Bhai and Tarek Bhai. That's all from my side.
So thank you, dear audience, respected stakeholders, for joining with us in this live earning disclosure event. We look forward to seeing you again with our H1 results in the next event. Until then, Assalamu alaikum, goodbye, and thank you.